Hey guys, welcome back to our channel. I'm Kenya, owner, professional trader, and educator with BK Trading Academy. We help new and struggling traders learn how to trade with structure and guidance so that you guys start the right way, you have a breakthrough, and you learn how to trade confidently. In today's video, we're going to do a detailed multiple time frame analysis on GBPUSD. I'm going to show you what's been going on with this pair and also how we can take our next trade and be prepared for what could possibly happen. So if you are new here, make sure you smash that like button. And if you are a returning subscriber, make sure you also like this video. Make sure you guys subscribe, turn on the notification bell so that you don't miss the next upload. And let's go ahead and hop right in.
Yeah, I know I got problems, and I don't know where to go. I don't want to put the blame on you.
We're going to start out on the monthly time frame of GBPUSD and just kind of assess what's going on here. So on the monthly time frame, you'll see that we are in an uptrend. And how do we know that we're in an uptrend? Well, we simply follow the market structure. So you'll see that previously we were in a downtrend. The market made a low in a very significant demand area, and then the market started to push up. So if I take a trend line and I use this trend line from the swing low and I connect it to my lows on the monthly, you will see that this price is overall rising. If you're a new trader, you might think that the price is going up and it's going down, and you're absolutely right. The white candles on my chart represent buyers, so you can see that buyers are pushing the price up. Sellers came in and pushed it down, buyers pushed it up, sellers pushed it down, buyers pushed it up, sellers pushed it down, buyers pushed it up, and now sellers are pushing it down again. So when you are in an uptrend or when the price is rising, we follow market structure in an uptrend or in a downtrend. And that market structure in an uptrend consists of what we call higher highs and also higher lows. So for example, in an uptrend, it always starts with a low, and then we make a high, and then we make a higher low because this low is not lower than the previous low. So it is considered a higher low. And then we made a new high in the market, which was higher than our previous high. And now we expect for another low to possibly be made somewhere within this area that aligns with our previous high. So this is also called support and resistance. So when you hear the term market structure, it is simply just support and resistance on your chart. And how we mark support and resistance, you can see that I have already circled these highs and lows. So this is where we would mark our support and also our resistance as well. So for example, if we simply wanted to mark a zone here, this could be a potential buy zone, okay? We've marked that where the structure is. We could also mark an area of resistance here so that when the market does return to this area, maybe this will be an area that we consider selling or where sellers will step in. You can also see that right off of this level right here would have been a great area where we could have bought in the market, and you'll see that this was also previous support. So oftentimes your previous support or resistance will become an area of future resistance or future support. So let's just kind of see that again. If I mark this area, that was a previous area of support. And I want you to think of support as the floor. So imagine that you are standing up on this floor and the support is holding you up, just like it's holding up these candles. So usually when you see previous support, that will often become future support or future resistance. So now, for example, if the market were to drop and break through this level, it's possible it will come back, retest it here. This would be an area we'd look to sell, and then we could take that with the continuing trend if that were to happen, okay? So let's focus on what's going on right now. So as you can see, the market is pretty much falling on the monthly. That candle is very bearish, and we are moving into a very strong reversal zone. Since the market is declining, we want to be looking for an opportunity to buy, preferably on the lower time frame. We never want to buy too high in the market. We don't want to sell too low. So now I'm going to move down to the weekly, and you will notice that on the weekly, we have a nice uptrend structure here. So what you want to do is pay attention to where the price has pivoted very forcefully in the past. So on this weekly time frame, notice that we do have an area of resistance. Price is now in that area right now. We don't know if it's going to pivot there, but if it doesn't, where's the next area it can go? Well, it can move down to this level here at 1.2886. So that could be another area where we'd also consider buying as well. Now, I can add some additional confirmations to this. I can also approach this through one of our strategies that we trade. So this is called the price action channel strategy. So with price action channel strategy, the first thing we do is find our key level. The next thing we do is we trap the price inside of a channel on the time frame that we trade. So you will notice that I have an uptrend here on the weekly, and notice I'm connecting this trend line to the actual lows of the candle. I'm then going to go ahead and trap the price inside of a channel, and I'm going to bring this other trend line to the top of my channel. Now you can see that we have price captured inside of the channel. I also can add a 50-period moving average, and anytime price is above the 50-period moving average, that is definitely a confluence for us to take the trade. Now I need to wait for confirmation as to where and when to buy. And what I am focused on are these previous areas where sellers stepped in and where buyers will potentially step in. So I know that this is a reversal zone. I need to be watching on the lower time frame, for example, for sellers to become weak and for buyers to step in. Now we always can be wrong in our analysis because it's never going to be perfect. You have to have a risk management plan. You need to know this before going in. If this doesn't work out according to my bias, how am I going to get out this trade? At least with a small loss, because we want to keep our losses very small. We want to let our winners run. Sometimes you just have to cut a loss altogether if you have no other options. But if you are trading within your 2% max risk, meaning that you don't have more than 2% in drawdown of your total account, then there are ways that you can still come out of this. If you are not over your 2% max risk or in a place where you're going to blow your account and you're using very reasonable position sizes, there's always, according to how I trade, always a way to come out of a trade profitable. You can come out profitable, and at worst case scenario, you'll be cutting very small losses. It's just all in how you manage your risk, and that's what we teach our students. So guys, you want to be watching for a buy opportunity right off of this weekly level, and you're focused on the reversal points where buyers and sellers stepped in the past. So this is going to be our area right within here, and you will also see that in this uptrend, we are also creating what's called a bullish flag pattern. So this is our bullish flag that is shaping up on this weekly, and there's a possibility price will move right in this area and then continue to the upside. Now, if it just continues to dip and dip and dip lower, then that's when we for sure have to change our bias. But right now, we should be focused on going long because the price is to the upside and we've gotten a very reasonable pullback. You want to monitor 1.2858 all the way to about, I would say, 1.2947, and watch for any weakness within this area where buyers could possibly step in. Now, if you do get a buy off of this area, you can take reasonable profit back to the middle of the channel at about 1.3200 to 3230. So that is my analysis on GBPUSD. If we break outside of this channel and below the 50-period moving average, which is quite a ways away, you have to decide where you want to absolutely cut your losses. But I do know and believe that this is going to move up. The only thing that would prevent it from happening is something unfortunate in the economy that doesn't happen every single day. So you can monitor this setup. I hope that you do very well on it, and I hope that this analysis helps you. And remember, you can always just set a limit order where you think the price will go, or you can wait for confirmation on the lower time frame. So for example, if you are monitoring from the weekly, you want to go down to maybe the 4-hour, and you want to watch this zone and see if buyers are going to start stepping in. And that's where you can combine any other additional confluences that you use, such as technical patterns. And then you just want to make sure that you're always watching news to see what other news events could and possibly impact your trade. So guys, I hope that you found this helpful. Comment on this video if you agree with this analysis or if you have a different idea of it. Overall, my bias is long on GBPUSD at the moment. And if anything changes, I will do my best to come back and update you. But make sure you're following us on TradingView and also that you're in our Telegram, and I will do my best to provide updates for you. All of that information is in the description of the video. If you are a new or struggling trader, I encourage you to check out the Academy. Come and join us. We have everything that you need to be successful. You will not need another course after being with us. Otherwise, guys, I hope you enjoyed this. Take care until I see you in the next video, and thanks for watching.
Yeah, I know I got problems, and I don't know where to go. I don't wanna put the blame on you.